Please be seated.
Matter C 2017-1 Annual Wage Review for decision.
The Fair Work Act requires the Commission's expert panel to conduct and complete a review of the national minimum wage and minimum wages in modern awards in each financial year. The decision we are issuing today deals with the 2016-17 Annual Wage Review and directly affects over 2.3 million employees who are reliant on minimum rates of pay. As part of the Annual Wage Review, the panel considers both the setting of the national minimum wage rate and whether to make any variations to modern award minimum wages. Each of these tasks is undertaken by reference to the applicable statutory criteria. In setting the national minimum wage rate, the panel must take into account the objects of the Act and the minimum wages objective in section 284. In reviewing modern award minimum wages, the panel must also take these matters into account, as well as the modern awards objective in section 134. We have taken all of these matters into account. The panel's decision-making process should be as transparent as possible. Accordingly, today's decision identifies the most significant issues which have affected the outcome of this review. However, the wide range of data and information before the panel and the often complex interaction between the matters we are required to take into account means that a comparison between reviews will rarely be straightforward. We turn first to the economic environment. The key changes in the economic environment in this review are as follows. Real net national disposable income increased by 6.8% over the year to December 2016, after it fell in the previous year. All measures of inflation have increased since the March quarter 2016, but are currently at the lower end of the RBA's medium-term target range. CPI increased by 2.1% over the year to the March quarter 2017. Over the 5 years to the December quarter 2016, labour productivity growth in the market sector was higher than the previous 5-year period and rose sharply in 2016. On an annual basis, profit growth was particularly strong in 2016 compared with the preceding years and above the 5-year and 10-year averages for both total industries and non-mining industries. The principal business conditions surveys show that the assessment of business conditions is positive and above long-term average trends. The economy has continued to grow, slightly below trend, with real GDP increasing by 2.4% over the year to the December quarter 2016. The unemployment rate has been relatively stable, increasing slightly from 5.7% in April 2016 to 5.8% in April 2017. Wages growth remains subdued. Growth in the WPI was lower in 2016 than in 2015. Growth in AWOTE rose. The subdued inflation means that there is little risk to the macroeconomic inflationary environment from our decision. The prevailing economic circumstances provide an opportunity to improve the relative living standards of the low paid and to enable them to better meet their needs. Over the last 5 years, the real value of the national minimum wage and modern award rates has grown at 4.3%, which is less than half the rate of growth of labour productivity. Economic considerations are not the only matters which the Act requires us to take into account. We are also required to take into account a range of social and other considerations. In particular, the promotion of social inclusion through increased workforce participation, relative living standards and the needs of the low paid, the principle of equal remuneration for work of equal or comparable value, and the need to encourage collective bargaining. No particular primacy is attached to the matters we are required to take into account. Our consideration of the international research on the impact of increases in minimum wages on employment, particularly the UK research, has fortified our view that modest and regular wage increases do not result in disemployment effects. That research also suggests that the panel's past assessment of what constitutes a modest increase may have been overly cautious in terms of its assessed disemployment effects. In previous reviews, the panel has accepted that if the low-paid are forced to live in poverty, then their needs are not being met, and that those in full-time employment can reasonably expect a standard of living that exceeds poverty levels. While we do not depart from that position, we acknowledge that the increase we propose will not lift all award-reliant employees out of poverty, particularly those households with dependent children and a single wage earner. Some parties proposed a higher level of adjustment to the national minimum wage than the adjustment they proposed to modern award minimum rates, or to award rates above a certain classification level, with the apparent intention of providing a more substantial increase to the lowest paid, and particularly those living in poverty. However, to grant an increase to the national minimum wage and to award minimum rates of the size necessary to immediately lift all full-time workers out of poverty, or an increase of the size proposed by some parties, is likely to have adverse employment effects on those groups who are already marginalised in the labour market, with a corresponding impact on the vulnerability of households to poverty due to loss of employment or hours. The level of increase we have decided upon will not lead to inflationary pressure and is highly unlikely to have any measurable negative impact on employment. It will, however, mean an improvement in the real wages of those employees who are reliant on the national minimum wage and modern award minimum wages, and an improvement in their relative living standards. We have determined that it is appropriate to increase the national minimum wage. The factors in our decision have led us to award an increase of 3.3%. The national minimum wage will be $694.90 per week, or $18.29 per hour. The hourly rate has been calculated by dividing the weekly rate by 38 on the basis of the 38-hour week for a full-time employee. This constitutes an increase of $22.20 per week to the weekly wage, or 59 cents per hour to the hourly rate. Having regard to the proposed national minimum wage and the other relevant considerations, we also consider it is appropriate to adjust modern award minimum rates. We have decided to increase modern award minimum wages by 3.3%. Weekly wages will be rounded to the nearest 10 cents. For the reasons we set out in our decision, no exceptional circumstances have been demonstrated, such as to warrant a deferral of the increases we have awarded. The determinations and orders giving effect to our decision will come into operation from the 1st of July 2017. The timetable for the 2017-18 annual wage review will be announced in the third quarter of this year. We wish to express our appreciation to the parties who participated in the review for their contributions, and to the staff of the Commission for their assistance. We now adjourn.